if there's one thing that defines what we've been going through, obviously, is after a dormant environment for volatility. I mean, we've been in ultra low, practically zilch vol for so long. The new volatility should really be good for gold. And we've seen a certain element of that, maybe not as much as you'd like, though, right?
Well, let's put it this way. Gold is a misunderstood asset, largely because the great stock market boom that we've enjoyed since the end of the past year through the past week has taken the interest of asset allocators away from gold. And to now, I can tell you that open interest in COMEX gold futures has actually been declining quite a bit because investors were actually, until recently, fleeing gold. So that we've gone from about 590,000 to 525,000 as of tonight. But options on gold futures have increased, and the next expiration will be the 22nd of February, and that will show you that we're now up over 1 million contracts in the options, the futures options, and so we think we're going to have quite an open interest expiration vol upcoming. Now, why? Okay. Of course, higher interest rates normally are not happy instance for gold investors because then, of course, there's a competition for gold in treasuries and so on. So higher interest rates have always put down gold, or it's been a headwind. But it's also this past week have shown that gold is still a haven, and it's a 5,000-year-old haven in the long run, and we are probably going to see higher interest rates because we are going to see the need for more capital because $1.5 trillion in legislation for infrastructure building, rebuilding Florida, Texas, California with the fires, Puerto Rico, and so we are going to be spending an inordinate amount of money, and the automobile industry will be probably having to produce 500,000 more automobiles into the normal sales year of whatever millions they project. And so all of that, in the long run, is going to help the metals, but gold especially.
Right. So, George, are you starting instead of a day in, day out, sort of an affair? That's like, oh, today the markets are a mess, so I think I'll maybe dip into a little gold today and then forget it tomorrow. Are you saying that it's becoming a little more of a long-term commitment that people are actually in for the longer, well, if not the longer haul, the mid haul? And is there a change in scope right now in terms of the time commitment?
The attention of asset allocators who are looking for a haven, and shareholders of certain funds that usually buy gold will start to ask about gold again. And then, of course, you have Chinese Lunar New Year next week starting, and you have India where the tax has gone from, say, 10% to 5% on gold, helping demand. Don't forget those shops in India, they don't close, but they were selling silver instead of gold because of the tax. So I think we're set up for a better environment for gold going forward, but it'll be quite some time because tonight we're still waiting to see if there's a government shutdown. We're still waiting to see if there'll be a bounce tomorrow for more than 100 or 200 points from short covering for the end of the week. And then, of course, you've had 3 Fed speakers, and on top of that, Mr. Fisher, former Fed official, on the tubes, talking about not 3, but 4 hikes coming, a quarter point 4 times. And all of that has been hurting our market, which is the precious metals market.